Investors and traders, welcome to the channel Market Chart Pattern. Today is 27th of October 2024. Hope everyone is having a great weekend. We will be taking a look at the key US markets. We will be taking a quick look at our timing model. Then we will take a look at the US dollar, Bitcoin, gold, the bonds, shorter end of the curve, longer end of the curve, and then we'll take a deep dive into the key US stock indices. As always, this video is for educational purposes only, and it is not a financial advice. So for the new subscribers, what we are looking at is a daily chart of Dow Jones Industrials, but it is also our timing model, and it has done a fantastic job. And more recently, we had a timing come in, which is a minor timing on 25th of October. And here, the key thing to note is that the big timing that we are watching for is actually 7th of November, which will be a Thursday. And with the timing, we have to give it 2 to 3 trading days on either side. Now, the one interesting fact about the 7th of November is that we also have the Federal Reserve come out in their FOMC and make an interest rate decision. Now, usually it's Tuesdays and Wednesdays, and the announcement come in on Wednesday, but not a lot of people have actually made a note of it, but they pushed it one day um, ahead. And what it means is that they will actually be coming out on Thursday, per my investigation, and make an announcement. So 7th of November happens to be a really key day, and I don't know exactly why they might have done this, but it might have had something to do with the elections that will be taking place earlier in that week. So that could be a possible reason, but I do not know the exact details of it. But just remember 7th of November as a key date in your minds. Now let's take a look at the US dollar. This is the daily chart of US dollar, and US dollar has been really strong. It completed our patterns, which I'll show you on the weekly chart. And after that, right from this key support zone, coming in from structure right back here in July of 2023. It has been going up for about a month now. And where it actually landed on Wednesday, last Wednesday, 23rd of October, was right at the 61.8% retracement. And then we had a following day in which actually the lows were taken out. And then we did not have a follow through on Friday. So that's an interesting observation. But the 61.8% retracement, it could provide further resistance, so we'll be watching this one. Now let's move to the weekly chart. Here we go, and what we can see is that we were watching, we had this 107 level as a key resistance level, and in my opinion that's a pretty important top. And if you'll just look at this overall, this has been actually a trading range, and the US dollar has been in a trading range since July of 2023, so last year's July. And it just came back, completed our pattern that we were watching around here, went into this shaded region, found support from a structure around here. And also it could also be viewed as a potential double bottom here as well, from this key level of 99, which is the 61.8% retracement of this low around here to these highs around here. So what it means is that the US dollar is actually pretty strong. Now, where it is at the moment is, if you just go back and look at the kind of movement it is showing us, it's kind of reminiscent of this one where we had a really strong move and it just kept on going for a few months. And then if we just look at this segment here, it just kept on going up for about 5 weeks or so. So from this 61.8% retracement, there is a possibility we could see some sort of a pullback. And if that were to happen, we could actually, using this concept of market symmetry, perhaps this is going to be around the 61.8% retracement. It could actually retrace around here, and then there is a chance what we could actually see is a ABCD move like this around here, which will actually take it back to the top of the range one more time. So that sort of scenario is possible. It just remains range bound. It actually tested the bottom of the range, and now it's most likely to go and test this region of 106 level one more time. So we'll be watching if this pattern is likely to take place. If 101.60 is taken out to the downside, and then I think we might actually see an ABCD which could actually take it down towards 98. The key level for us longer term that we are watching is 99 and 98. If the dollar index is able to break below 98 in particular, then we have a chance that it's going to go all the way down to about 91 and it'll complete this ABCD. So this is what we are watching in the dollar index. Let's now take a look at on the flip side some of the major currencies, how they have been doing. So this is the Euro USD. Let me actually bring it back. The one we were watching for is this one. So you can see that because dollar index is about 52.5%, roughly is euro currency. So whatever dollar index is doing is pretty much a mirror image of what will be happening in the euro currency. So here we can see that we have some trend line support coming in, and this week when it started, it did look like, especially on Thursday, that euro was putting in a good bottom, but Friday things changed. So in my opinion, we still have support around 107.50 roughly, and we have this higher bottoms around here. We have this trend line coming in as well, and getting below the trend line, of course, then make it go towards 105 level. Now if we just move back to the daily chart, and on the daily chart, this is what we were watching. This is the trend line that I mentioned, and on Thursday it had a really nice looking bullish candle formation, but no follow through. Thursday, in fact, Thursday, the market was pretty interesting because what happened was in the London session, there was a fair amount of weakness in the US dollar, and the euro was really flying high. And then it is when the US session started, and then later towards the afternoon, we began to see selling pressure come in the euro currency, and the dollar was bid. So this is what we observed, and whether that remains a one-day thing, we'll have to wait and see, because this trend line structure is still there. So there is some chance for the Euro USD to the upside, in especially when we have the dollar index at the 61.8% Fibonacci retracement level. Now, if we take a look at the British pound cable, you can see that cable, really nice looking trend line right here. It went below that. Now it's kind of hovering around it, but it is really weak. It's pretty weak because the US dollar has been quite strong. But if you look at the price action of last Friday, there was not that much selling that happened in comparison to the euro currency. So there is further strength in comparison in the British pound than to the US dollar. Now let's actually take a look at this on the weekly chart. Here we can see that here I think I've pulled up the wrong one. It's this one that we take a look at. Yeah, I just wanted to show you one thing uh, on the daily chart here. This 134.50 level, it was very 134.25. It's a pretty strong resistance level because the number of you can see the number of patterns being completed there. This ABCD in red, the black ABCD, then we had some Fibonacci expansions coming in. So that's why we have seen a pretty strong move in the British pound to the downside. And if we just kind of take the market symmetry concept, and this was the move um, that had taken place in this, let's say, for example, in this entire run up higher from October of last year, 2023. This was the biggest decline, and we are actually pretty close to it. We came as low as 129, and this is like 128.35. Um, so, but we also have this trend line right here. So we are quite close towards perhaps the end of it. That is a possibility, but it all depends on the US dollar, if the US dollar would actually show more weakness or not. Now let's move on to the Japanese yen. Here we go. So the Japanese yen, uh, it just continues to move higher, and it's just fantastic to see that. Actually, we were watching this wedge pattern, and it's just broken up to the upside, right into this 1.618 expansion. So let me see what sort of retracement do we have here. Looks like it's got a little bit further to go, around 154, where we have the 61.8% retracement. A lot of strength that came into the US currency on Wednesday in comparison to the Japanese yen. Now let's take a look at the Bitcoin. Here we go. Now the Bitcoin is really interesting because we have seen a fair amount of strength, which has come in over the past 4 weeks in the US dollar. But the Bitcoin actually remains pretty resilient. It remains range bound, so you can see this entire pretty big range, but it also completed several of these ABCDs right here, especially when the low came in on 5th of August. And September was a really key month for Bitcoin because of the Lucas spiral timing model. And I believe that we are more likely to be remain more in a range bound market for quite some time in the Bitcoin. So, but it remains strong. So we are likely to actually see higher prices, especially moving into 2025. But we could still see a pullback back into the middle of the range, probably maybe towards the bottom of the range as well. It remains range bound. But the key thing is that this level right here, which is the 38.2% retracement around 51,523, that has been respected, and that has been the low which came in also on the 5th of August. And we also saw lows coming in a lot of stock indices in the US market, also in the European markets, and also in the Japanese Nikkei 225 as well. So here, what I'm expecting is, let's take a look at whether it's completing an ABCD, and I'm just going to do this shorter term ABCD right here. And here, yeah, it's still got a chance to actually go and tackle these highs coming in from June of 2024. So that remains a possibility. It could move into this gap formation. If you just look at this entire thing, it's like a gap. So most likely, this is what the Bitcoin is targeting, but it might not do that immediately. It might actually trade sideways to down a little bit, maybe do a little A, B, C, D like this, and then move higher. So this is what we're watching in Bitcoin. Now let's take a look at the gold market, because this is another one which has been really very resilient, especially in the face of the US dollar getting strong over the course of last past 4 weeks. So it's been a month, and what we can see is this market actually being range bound. Now there's one thing that I wanted to actually show you guys, and that is it's more for the new subscribers. In gold market, we have been watching this really key level of 27.35 to around 27.60, and that's because we have a number of these really longer term ABCDs completing around here. Now there is a psychological level of 3,000, and there's a possibility that the market, because momentum is so strong, it could make a dash for it. But along the way, this 29.36 is another level. But we are really more cautious of gold at these levels. And the reason is that it's possible that the gold could actually, make a retracement of 200 to $300. But with this kind of strong momentum, we have to watch and go with the momentum. The interesting thing is that what gold did is, let me actually go down to, let's see, we go to an hourly chart here, and that was this thing, that here, this is on Wednesday, gold dropped about $50. This is one of the bigger declines that we have seen. And the so if we just go back around here, 8th of October, this is where we have seen some declines like this, but the market found a bottom. This is right at the top. So what is possible is that if this is an important top, which coming in on 23rd of October, we have a possibility of this kind of pattern formation right here, which is not too far away. And then if we just draw retracements like this, and we have this 78.6% retracement around that level. So this 27, 60, 65, and we are looking at COMEX gold, which is the futures. It's a pretty key level, and if the market begins to reverse from here, then most likely we are in A, B, C, D to the downside, and the market could actually come a little bit lower, maybe around 27.20. So that possibility remains there for the gold market. Now let's take a look at the silver market. Here we go. So the silver market, basically it completed our target of 33.86. There's a chance that maybe it's going for 35.30. And what we were watching for was this. Let me actually show it to you on a couple of 2-hour chart, that we have an A, B, C, D, which comes a little bit lower around here, 33. That might be a strong support for this one, and maybe it could make a dash for 35.80 level, but remains to be seen. But this one is weaker than the gold market. You can see by these daily bars around here, and there's a possibility that 35.20 that we're watching for, that this is maybe as close to this level the market might come to, and we could see a decline. And probably the simplest way to look at this will be through this trend line. A break of this trend line, which will just tell us that okay, this is maybe an important high reached, and we could be looking at bottom of the range being tested, and if it begins to break the lows of 5th of August, then we might have had a pretty important top in place, which could last several months in fact. So this is the silver market, and now let's take a look at the bond markets, because the bond market is really interesting, and I should have covered it right at the start actually. So this is the shorter end of the curve. This is 2-year yields, and you can just see that the yields are actually, they continue to move higher. And if you begin to move towards the longer term maturities, to look at 10-year and especially long bond yields, the situation looks like the yields are moving higher. So we had a situation where we have this, it completed off all our patterns right here. For new time subscribers, we were watching for 3.9% when the market was around yielding 5% for the 2-year note. So the market actually hit our target and went actually below that and found support from structure around here. And then what looks like around here to us has been a retracement right to the 38.2%. Now this is a really key one. If it breaks above this, then 4.35 is the next target, maybe even 4.47, which is going to be the 61.8% retracement. Now if we move and take a look at the 10-year note, which is really important, and we are looking at the futures chart, because 10 years is the kind of duration of which a lot of the credit card companies take a look at and mark their rates and stuff like that, automobiles, auto loans and stuff. So, and it's a huge market. This market is much bigger than the long bond future market, which is the 30-year duration bonds. Now this market has been acting pretty strange in my opinion, and I'll explain what I mean. So technically it had completed this ABCD, and this is when the 5th of August happened, and then we saw a decline. Then the market actually rose higher right into putting in a top. 17th of September is where it confirmed a double top, and that's the date when the Federal Reserve actually came out. They came out on the 18th actually, but they started their FOMC on the 17th, and they actually dropped the interest rates by 50 basis points. That's a half a percentage point. Now one would have thought that because the bond prices and yields are inversely related with the Federal Reserve cutting rates, the price for the bonds should have moved higher because of the yields moving lower. But the market is actually telling us something else. And in fact, what we have seen is actually the market pulling much lower. We had several levels that we were watching around here, and I was really hoping for this trend line to hold. And then this 38.2% retracement level around the 111 and 25 seconds to health, but I was surprised when it was taken out to the downside. And the bond market is actually telling us that the Federal Reserve, they might not actually be more aggressive in cutting the interest rates, and it could also mean that the inflation is likely to come back, or it's going to be more sticky. But there is one more aspect to it as well, and then the bond market might actually be trying to make a statement that the policy for the U.S. policy, economic policy, could change in a quite a significant way after the elections, and there's a chance that the next candidate who comes into the office might have a policy where the interest rates could actually go much lower, and so the taxation could also be cut quite a bit, and that sort of combination is something which the bond market doesn't seem to like at the moment. So that's another interpretation of what is going on around here. It has to do with the budget deficit as well. So many things. So we'll wait and see what the market is likely to do. There was a chance on Thursday and then also on Friday that the market might actually rally a little bit. It did, but it's just a dead cat sort of a bounce here. It's just gone nowhere. But having broken the 38.2% retracement, I think it's got a chance right here to come down to 50% around 110.16 seconds. So further, most likely some further declines um, or in the price of the 10-year treasury note. In other words, the yields moving a little bit higher. And then if we take a look at the longer end, this is the 30-year bonds, and what we saw is actually this pattern failing, pretty disappointing. And the market where it is right around the 61.8% retracement. So there is maybe perhaps some sort of some we can see some sort of a rally coming, but what we are seeing is the market does rally about a point and a half at times, and then the selling pressure comes in. So clearly the bond market doesn't like the fact that the Fed might actually be aggressive in their interest rate cutting cycle. Now with that, let's move on to the equity market. So we start by taking a look at the S&P 500 cash index. Here we go. It's right in our window, which was our target. We do have higher targets as well, around 6,000. What I'm not sure is that whether we'll be able to reach these targets before the election, or whether it's going to be something after the elections. Um, but what last Friday's price action actually told me is that the market actually tried to rally, but there were sellers around here. It's more visible on the futures chart, so we'll actually switch to this futures chart. So it's a pretty bearish price action that took place last Friday. Now, the important thing to note is it's right into this zone which we had forecasted in advance. So it has kind of met our targets. The only thing is we have higher targets as well, but as I mentioned, not sure whether the market hit those levels before election, because we are now in a pocket where the volatility could increase quite a bit actually. So we'll have to be mindful of that. And I'll just also show you the VIX chart as well. This is what the weekly chart looks like. So you can see that in 1, 2, 3, 4, 5, 6 weeks, is a month and a half, we have seen the first negative close for the week, and where we also have this red ABCD completing around here as well. Now, if we switch over to the futures chart, here we go. Here we can see the ABCD. Here we do have these further targets as well, but this looks like more of an engulfing pattern and a bearish close on the weekly chart. And then if we just move down to the daily chart on the S&P 500 E-mini futures, this is the sign which I thought was a bit troubling, because this high of 23rd of Wednesday, the market was strong. It went a little bit above that, and that's where the sellers were sitting. So it could mean that we could have an A, B, C, D, which could actually take it lower in this region. So there could be actually a pullback coming into the market. And if we take a look at the NASDAQ 100, now when we had a pullback on Wednesday, it went into a key level, formed this pattern formation, and then we saw a nice rally for a couple of days after that. And the interesting thing is that last Friday the market actually rallied, took out the highs of 14th of October by a few points, and that's where the sellers came in and they actually knocked it down back into the trading range. The key remains at 23rd of October low. If it's broken to the downside, then it's going to go and test the bottom of this range around 19,800. But we could also be looking at some sort of a rounding top formation around here. On the flip side, we have this ABCD, which could still, make the market go a little bit higher, maybe make a new all-time high as well. That possibility is there as well. But with this kind of a price action, especially last Friday, I think the possibility is getting reduced. And the other thing is, now we are beginning to see a market which is becoming more of a range bound on two ways, because we have bullish bars, so we have bullish days and then we have bearish days as well. So that just tells us that the character of the market is changing. It's not like this what it was here, where it was just very little bearish closes, and the bulls were actually in full control. Now, one of the really interesting price action was actually in Dow Jones. Now, Dow Jones is price weighted; it's not market cap weighted. So this is the daily chart, and here we can see that this market has actually been moving lower after meeting our target right here in this box. 1.618 expansion of this swing high to low around here. We had the ABCD completed around here as well, so it's right into the target on the daily chart that we had for this market. So that's the job well done. And then it's just been coming down, down, down. And I think one of the reasons is there are stocks like Goldman Sachs, which we covered in yesterday's video for the financial stocks. Those are pretty. Those are my $500 stocks. So if it is, if and that has a pretty good impact on the Dow Jones. So we had a sell-off coming in that Goldman Sachs last Friday. So now it's really at the bottom of this trading range. Getting below this is actually failure of this swing low. So we'll be breaking a swing low, and that will be a failure of this swing high, so which means that we are likely to be moving lower. So Dow Jones is actually showing this picture, which we do not see in a NASDAQ at the moment, and also not very clear in the S&P 500 yet as well. Now this is the thing that what we are looking at is on the weekly chart. We do have higher targets here as well. Again, as I mentioned, not really sure if the volatility begins to come into the market, whether we see these before the election or it happens after the elections, or if it happens at all, remains to be seen. But the volatility is coming into the market now. And look at this candle. This was a move down by about 1,247 points, so about 1,250 points in 1 week. And if we just take a look at this on the 3rd of September, when we also had key timing coming into the market, we had a 1,300 points move to the downside for that week, but there was no follow through. So now the key thing will be that we have had these really negative moves on the weekly basis. This is where the 5th of August was. But if we're going to see a follow through or not, if it's going to be a situation like this, then next Monday, Tuesday, the market is likely to reverse this, and we should begin to see a rally take place, and that will give us an early indication. But if we get a follow through and we get a second negative closing week, then we haven't seen this sort of situation since 5th of August. So that's gonna tell us that something, the characteristic of the market is changing. So that will be a direct market feedback. Now let's take a look at the Russell 2000. Russell 2000 right into this box again. It's in trading range. Not a very good closing, negative closing week for the Russell 2000. So I think the weakness is likely to continue for this one. Whether it's able to make this black ABC to the upside, I don't think it will be able to do that, at least in this run before the elections. Now let's take a look at NYA, New York Stock Exchange Composite Index, and there we go. That also hit our level, which was around 19,980. It went as high as 19,905. So it missed it by about 75 points. 75 points in something which is roughly 20,000. We have to give it some leeway. So here, quite similar to the price action is quite similar to Dow Jones here. So we'll just draw a trend line like this, and it could be argued that maybe it is already broken to the downside, and we have in fact this sort of wedge formation. There we go. So yeah, looks like we might begin to see a further pullback, which could actually bring it back to around this 20 week moving average, and it comes right from this key level around here as well. So the volatility is coming into the market, so we have to be aware of it, we have to acknowledge it, and we have to work with it, and we have to be careful with our positions being put on into the marketplace. This is the weekly chart of wicks. We can see that the wicks is actually holding this low around here, which is also a higher bottom. It hasn't made a higher high yet, and I'm not entirely sure if it will be able to, because look at this 65. It's going to be a massive volatility uh, move, which probably was the third highest that we have seen on the 5th of August. So not sure we're going to see something of that sort of magnitude, but it is telling us the volatility is coming back into the market, and then we're going to have basically trading ranges are going to increase. This is what it's suggesting. So we're going to have up moves, down moves, several hundred points moves in the S&P 500, several thousand points moves in the Dow Jones, and also similarly several hundred point moves in the NASDAQ 100. So there we go. We can see that here is this nice little trend line here, and here I think the key will be once it begins to break above this 23 or roughly 25 level, then we will know that it could make a really quick move higher, maybe around here, maybe around 50% of this. So we could see something maybe around 52, and that could be quite scary. So this is what we are watching in the key markets in the US. So we covered the bond markets, the US dollar, a few special currency pairs that we like to watch, Bitcoin, the bond markets through the eyes of the futures, and the 2-year Treasury note, and the key US stock indices. So thank you very much for watching the video, and if you happen to like our technical analysis and you found this video of educational value, then please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. And if you just happen to like the video because you learned something, please give it a thumbs up. I will really appreciate that. Thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.